Good morning, traders. Today is October 16th, Sunday, early in the morning. This is Brad Matheny. We're going to go over the 5 to 10 minute market snapshot here. We are going to start with the S&P, the ES Pound F monthly chart. And what I'm going to focus on here is to show you how the markets are holding up here in October. Right now, they're setting up a very interesting bottoming formation, very close to or just below this 382 level. Now I've drawn this line here, this green line that highlights what I believe is very critical support to the market. This was the initial rebound in 2010, 9, 10, 11, where the markets rolled upward, and you can see the markets rolled right over the peak here, rolled through this level in 18, 19, found some momentum, really rallied up out of this move in late 2019. We had the COVID pullback, and now you can see that we're right down at those lows. I've been calling this support for many, many weeks and months now. This is a line that I followed for quite a while. I believe, as Gann teaches, that we're seeing historical trend lines now being retested back over here. But what I found very interesting today was this pitchfork that I drew here, these orange lines and this middle blue line here, from the 2016 lows or midpoints here across the pre-COVID and pre-COVID highs and COVID lows. And what this has done is this has shown me that my original expectation for a low right here, a wave 4 low, was in exact alignment to price. It's very unusual that we can see this type of activity. It happens simply because, you know, visually I see these things on the chart as far as price structure, but it's very, very interesting we see these things align. Now, when we get into the real support level here, if I pull this back and take a look at this support level right over here, we're very near low levels. We've actually come down and touched, if I spread this out a little further, we've come down and touched this line, this dashed green line, this critical support level. And I still believe that the markets are attempting to bottom here and will likely move into a rally phase, a Christmas rally phase, possibly back up into this level, the upper pitchfork level. But something else that I found extremely interesting was by playing around a little bit with Fibonacci levels and trying to take a look at retracement levels here, you can see that we've got these retracement levels from these 2000, we come back over here, I believe they're the 2015 lows, 16 lows, right back here, all the way up to these highs. You can see we're at a 382 level. But I've drawn this other Fibonacci level, which I want you to pay attention to. And what I'm doing in this scenario is I'm ignoring high and low points, calling these washout rotations. And I'm focusing on the midpoint of this upper channel, which is really the opening price of this bar here. And I'm focusing on the midpoint down here, which comes off of these two close and open price levels here. This gives us maybe a bit truer representation of what's actually taking place as far as price activity, ignoring the highs and lows. And you can see that we are right now just dancing around this 0.50 support level at 3558.25. So understand that we are very, very close to a dual Fibonacci level here. When you look at this, we have the 382 level, which is right above it. We have the 0.50 level here, which is just near these lows. And then we have this deeper, lower channel, which is longer term support. It's very, very likely, in my opinion, especially after COVID or the CPI number and the inflation levels, that we're going to start to see a change in consumer sentiment. Remember, investors typically want the markets to move higher. They expect the markets to move higher. It's an endorphin rush, literally. When you get right down to it, the reason why markets don't go down is that often, and when they do, it takes something major. It's because that psychologically, investors typically expect or want or perceive the markets to increase in value. And the amount of money that the Feds and the global central banks have dumped into this has been stupendous. So now, we've already spent 5 minutes on this one chart. Let me come over here to this next chart because I need to keep moving. And this is the NQ. And we're going to kind of do the same thing. What we're going to do here, ladies and gentlemen, is we've got this channeling system here, which you can see we've broken down below this channeling system. Go all the way back to these levels. And now I'm going to highlight this Fibonacci level, which is measuring from these lows back over here to these highs over here. And you can see that we are, again, near the 382 level. The NASDAQ is different than the S&P, but we're right down near these lows here, attempting to form support. Next, we're going to add the next intermediate support level, which again, drawn off of the midpoint, the average open-close price range. And again, I'm picking this midpoint area here, 2015-16, and where we're at with that is a 618 pullback. So come down here and take a look at this. We're very, very close to this 618 level at 10,734. And we're very close to this 382 level like we had in the previous chart. And additionally, we have this last pitchfork, which I want to point out to you from the, let's find the beginning point here is right here. So we're basically 2016 to the 2018 lows to the pre-COVID highs. This was the COVID collapse right here. And you can see that we're, again, very, very close to this middle pitchfork area. I would not be surprised to see a basing bottoming formation take place in this area, rallying back up into this area before the end of the year. Now, this is a monthly NQ chart. So we have quite a bit of support forming in the markets right now. We could, of course, see a downward trend. So we need to be aware of a potential breakdown in the markets that could eventually come down to these lower levels. But I'm very cautious of a bottom setting up in the market right now that everybody seems to be very uber bearish. Doom and gloom, doom and gloom. And yes, the Fed is probably going to push things into a different direction. But I think we're moving into a support level right now. I think we're moving into a basing bottoming formation. Price is holding up, particularly after the CPI level. The big recovery on Thursday was stupendous. But we need to watch these levels. These are critical levels that many people may or may not be paying attention to. So now I want to move over here to gold. Gold is still doing the same thing. In fact, let me go to a monthly chart. And I'm using TradingView for these on a recommendation of a friend to potentially get into using more TradingView charts. And you can see the big rally we have here in gold. And then we have this dual support with this pennant formation here. In theory, ladies and gentlemen, we've got an A, B formation here, C, D, E. So in theory, we would be looking for a moderate recovery, a rotation, and then some sort of a breakout to the upside. And that's where gold is really holding. Gold is holding up stupendously compared to the US dollar. We've got a very solid bottoming formation. If I go back again to weekly, you can see this lower green line here off of these pre-COVID levels. We're dancing around these pre-COVID levels right now. I would not be surprised to see gold rally back up off of these lows this next week and try to hold support. Obviously, if we get below this green line, we could see it more extended downward trending. But the reality is, ladies and gentlemen, I think gold is holding up very, very well. I do like the fact that we've got divergent trends here. This blue line compared to this blue line here. Very interesting, very, very solid basing bottoming formation. And I believe the next phase is going to be an upward rally up to 1880, 1890, maybe 1900. Let's go to crude oil. Crude oil is trending downward. We have these lower lows, lower highs. You can see here this peak, this rotation. Now we're down in this area. The next phase for oil is down into this 70, 60, 68, 69, 70 range. That's going to put us very, very close to these channel lines here. So I'll try to draw a couple of channel lines here, right around these areas. You can see these peaks back here. try to get a quick line in here before I run out of time. So right down in these areas. So this is where we're looking for oil right now. Oil is likely going to try to move downward from this level down into this 69, 68, $67 area. And this is going to be mostly due to demand destruction. Okay, it's economically $60, $70 oil is still very feasible, but this is going to be mostly due to demand destruction throughout the world. Okay, lastly, we're going to go to Bitcoin. Bitcoin is holding up very well. It's creating these nice little peaking formations. I've drawn them in red lines here. And I want you to be aware that this bottom right here is still holding up very, very well. We've got a very good chance at another recovery rally back up into this $25,000 to $30,000 area. And it's very, very likely that this is going to come through a Q4, Q1, meaning Q4 of this year, Q1 of next year type of recovery move. So again, we've seen this massive deflation. When you think about this, from the peak area here, just like the regular markets, we've seen a 75, almost 74% destruction in pricing valuation. We've seen this across a number of different assets. This is a substantial devaluation in the price of Bitcoin. Likely any level any chance you get down below 17,685 roughly would be an excellent buying opportunity. This $9,000 low may never come to fruition. This low level, which we're almost at right now, looks like a very solid bottom. We've unwound. We've moved sideways. We might get a little blip lower here, but this looks like it's setting up a very solid bottoming formation. And as you can see, we actually have a little bit of divergence here coming across these levels. If this holds, we've got a little bit of divergence in the sense that we've got downward trending, come on mouse, with upward divergent stochastics. So for Bitcoin, this could be a very solid move where looks like we see possibly a 40 to 50%, let me take a look. Yeah, approximately 50 to 60% upside move for Bitcoin over the next 6 to 8 months. Now, I'm not predicting it's going to go back up to 40 or 50,000. I'm saying 26 to say 28, 28,500 is more than likely a very solid move. All right, guys, 12 and a half, almost 13 minutes. There's your quick update. Follow the majors. Let's see what happens next week. Follow me on YouTube. Follow my research on Twitter. Looks like the markets are trying to bottom, and we may see a shift by the Fed and global central banks as this transitions into a new phase going into Q4 2022.